For direct-to-consumer founders who struggle to acquire first-order profit, for D2C founders that have a brand that's more on the seasonality side focused, how do you scale profitably? How do you acquire brand new customers that don't leave you during Q4, Black Friday, Cyber Monday? My name is Chris Hernandez. I'm the founder of ScaleVelocity.io. What I do is I help founders ultimately dial in their front-end unit economics while building in-house for exits and controlling every single facet possible. It's optimizing the sales funnel, increasing your net margin or increasing your AOV with different product verticals or different product bundle SKUs. It's optimizing the Creative Flywheel System. It's optimizing the post-click experience. All these variables is what lowers your CPMs and ultimately what increases your AOV. Now, I've had over 10 calls the last week. These are D2C founders around that 1 million a year mark, even sub 1 million a year. And I've noticed a pattern. I've noticed they've struggled acquiring first order profit and they go about their marketing strategy completely wrong. So this guide right here is the exact roadmap necessary so that you can take advantage of the buying seasons, but ultimately you're set up for success so that you can slowly integrate in-house. Now, each product, each brand is different. I don't know your product more than you do. You're the founder. You've built the product. You've designed everything A to Z. But with this roadmap, this is an implementation pathway. These principles never go out. These are solid principles built on years and years of individuals before me laying the foundations. My role is simply giving you the guidance necessary so that you can take these exact principles, implement it into your business. So let's define seasonality. In a single season, we're given 4 quarters for every sector of business: Q1, Q2, Q3, Q4. Now, depending on your product, depending how seasonal it is, you might see a lift in performance around Q2, Q3 around if it's a summer focused product like swimwear, like you sell something along the lines of like sandals, more for outdoor type behaviors. And then you also have the flip side to that. Let's say you sell socks, or let's say you sell boots, or let's say you sell material for the winter seasons, right? You're going to see a lift around Q3, Q4 for these products. Now, you also have the flip side to that. You have brands that have SKUs that are running evergreen, right? You can sell any time of the month or any time of the quarter. But these type of products, essentially, you get majority of your sales or majority of your net profit within Q4 just because the buying behavior is significantly higher around this time of year for the holidays. Now, as I covered before, every single brand is different. It requires a unique marketing strategy. But with these principles alone, this is going to guide you to capitalize on buying momentum, how to increase your net profit margin month over month, no matter the time of the year. Let's cover this first. Your Q4 success is built on previous quarters of iterations. To make money on ads, to make money on your sales funnel, you need to constantly be testing either new product bundles, new offers, different creatives, different landing pages to overall increase your conversion rate. But every single stage is different. It requires a different level of variables being tested. Now, the bottleneck I see across the board, most founders lack the breakthrough into the markets because they've taken strategies that worked in 2020 and think they can apply it in 2023 during a market of high churn rates, high inflation rates, and ultimately a lot of competition. So as I covered before, I've had dozens of calls with D2C founders, and these are the common pitfalls I see most founders face. They acquire a brand new customer at a net loss and bank on LTV to turn a profit. This was adopted in 2020. I see a lot of SaaS companies follow this model, but if you're a D2C brand, you don't have the margins to do that. I see founders push 50% off discounts on scale with one single SKU, and especially during Q4, you have a lot of founders push 60%, 70% off on single products, which, I mean, as a byproduct, you're hurting your net margin, you're acquiring low bottom feeder customers, and ultimately, you're training your customers to buy back from your company when you have a big sale. Also, I see a lot of founders with very limited capital, I'm talking sub 10K a month in ad spend, allocate ad budget across multiple channels without defining market fit and scaling across one single channel. A lot of founders typically outsource the higher levers of growth to agencies without any clear roadmap of each quarter's goals, and it's a mistake. Most founders don't even know how to read ad platform data nor how to set up campaigns. I'm not saying you should spend all of your time here, but you should understand the fundamentals and understand what is happening, because majority of the agencies, if you hire them for Facebook, they're trying to grow, they're trying to look good based off the attribution model. They're trying to get you to stay on with them longer term. So they're going to inflate numbers, and they're just ultimately going to retarget customers that have already entered your ecosystem, which is hurting your bottom line. Your focus should be, okay, how does this platform lift search? How does this platform lift email opt-ins? How does this single platform ultimately raise awareness? And how do we acquire brand new top of funnel customers into the ecosystem? Because if you keep acquiring brand new customers, that fills your bottom line. But if you solely focus on middle of the funnel, bottom of the funnel targeting, you're hurting your bottom line because you're exhausting the existing customer base. And a common pitfall I see across the board is there's no organization of finances. So every brand sub 1 million a year falls into one or more of these categories. This stems from government lockdowns. In 2020, any brand could literally create a store, create an ad, and they're getting sales just because stimulus checks flood the market. People were in lockdown in their houses, and they're forced to spend 90% of their budget on online retail. So this model in itself, what I'm seeing is brands that are operating with these previous strategies before are struggling. They have low profit margins, they're barely at break even, and they're on the brink of bankruptcy. So the pathway to year-over-year growth stems from first order profit. The brands that are seeing success today have first order profit and heavy cash flow to float expansion, while competitors struggling are pulling back on ad spend. So first order profit is a non-negotiable, and this doesn't happen by simply pushing one single SKU products in direct to consumer. Now, the formula to increase net profit has a variety of variables, right? One way to increase your net profit margin is decreasing the cost of goods from your manufacturer. But if you're a startup brand, this is very difficult because you still have to validate market fit. Now, I see more experienced brands doing 10, 20, 30 million a year. They have good partnerships with their manufacturer, and they're able to decrease their COGs because they have cash flow to suit them for testing other manufacturers to get that cost of goods down. Now, this is by far the hardest, and this is not really my expertise, right? I'm not on the manufacturer side. I don't know what your manufacturing looks like or your partnership behind that. But the easiest variable to control with what you have right now is simply combining a set of SKUs for a higher AOV bundle. This requires an optimized sales funnel. The Creative Flywheel System in a controlled environment to pump out, test new angles, new creatives to target different pockets of customers to enter your ecosystem. And then reducing your front end CPA by simply having market fit coupled with a Grand Slam offer. Now, it's far easier to increase your prices, increase your AOV, than it is to lower your nCPA. But when you have a higher AOV bundle, you combine your best SKUs together, you're able to now craft Grand Slam offers. You're able to now make the experience far more better for a brand new customer. So with the North Star being first order profit, pushing one single SKU will only yield towards break even and even ad spend sub 1K a day. It's very inconsistent. You can't control your CPMs. You can't control your CPAs. But if we take the same approach and apply it to simply raising our AOV, that has unprecedented compound effects. By simply raising your AOV in an evergreen bundle offer, you increase your perceived value in the market. Your net profit to fund further iterations allows you to have that to test further. Your LTV from a new customer support as a consumer, they see results within 30 to 60 days because they have a set bundle. So then they're more likely to come back to your business to, if you run a subscription, if you run supplements, they're able to come back and buy back from your business. If you sell apparel or clothing, they can buy other upsells or downsells that you have within the same vertical, right? We want to push higher AOV bundles because this is more likely to lead to a transformation. And then when you have a higher AOV bundle, you have the ability to craft Grand Slam offers with the set amount of SKUs. So we want to validate a single bundle SKU that can be ran any time of the year. Will do far more for a business than constantly pushing one single SKU and hoping to make a profit each month. While establishing a winning SKU with a compelling no-brainer offer, there's more cash flow in your business to focus on either product development or other offers during booming periods of seasonality. Now, the implementation pathway looks something like this. Q1, we're testing various bundle products. We're troubleshooting the sales funnel to acquire customers at a profit. Q2 is where we pretty much were scaling across one single channel, automating key variables, creative, marketing strategy, and offer integration. We're looking to have all these assets, resources built in-house. Q3, we're repeating actions Q1 and Q2. We're testing out different bundle SKUs. We might be diversifying across different channels. My focus, I like going towards Meta first, getting to 100K month in ad spend, diversifying into Google because Google's going to retarget users on Meta that didn't convert, and then looking for a third platform, whether that's TikTok or whether that's YouTube ads, to be diversified across multiple channels. And in Q4, we're just pushing spend across winning bundles that have been defined, existing customer base, and we're, as a byproduct, we have a bunch of new customers that enter the ecosystem during Q1, Q2, Q3, where we're just coming up with an upsell or downsell bundle to hit these existing customer bases to grow our net margin to have a profitable Q4 that funds the following year's objectives, right? Q4, the main focus is, can we acquire brand new customers at a profit? And then can we get these same exact customers that entered our ecosystem to buy back from our business during Q1, Q2 to keep growing our revenue? Now, 60% and 70% off discounts during Black Friday, Cyber Monday hurts your business rather than growing your bottom line. Here's why. So a lot of D2C founders have been trained and accustomed to doing a heavy discount on single SKUs or bundles. But what happens is, you're hurting your front end profit. When you push these discounts, you're attracting lower tier customers who only purchase once, never come back to your business to buy back again. Your perceived value diminishes because now your brand/product is compared to other competitors solely on price. Customers are going to look for other competitors to offer the same exact product at a high enough discount, right? And you're simply training your customers to buy back when you had these new discounts. Now, the offer archetype that has been ran for dozens of years in the info product industry since popular commercials like OxyClean, Chia Pet, Zorbeez, and many more D2C brands is simply offer stacking. When you offer stack, you have a bundle of, you buy this today, we'll give you an additional Y for free. Your perceived value as a byproduct goes through the roof, and more people are likely to spend $150, $200, $250 with you because they understand the total return in value they're going to get is around $500, even $1,000 worth of perceived value. And these companies have done it on commercials, and it's been proven to work no matter any time of the year. Now, the beauty of crafting a higher evergreen AOV bundle allows us marketers to simply add to the existing Grand Slam offer, right? When we're testing Q1, Q2, Q3, we have this evergreen funnel that's pretty much proven, and it's been dialed in and it's working. When Q4 rolls around, we just add to that bundle that's been proven to work. Now we might add more products to now increase the AOV. We might take a product or an offer that we're running where it's buy 3, you get Y free. Now we're offer stacking that even further to go, okay, you buy 5, you're going to get X in value. But with the proven funnel, your unit economics dialed in, you have first order profit, you have existing winning creatives with significant data backed by CPMs and backed by your CPAs, you're able to now upsell, downsell, and cross-sell, which will lift overall conversion rate even higher as consumers are heightened to buy during Q4 Cyber Monday. As a product or a second order consequence with offer stack in the front end, your new customer gets access to 3 to 5 SKUs. So what happens is you have a dopamine rush from an end consumer perspective. They see what they receive. They feel like they paid way less from what the overall value they're getting. The customer is more invested to transform their lives and ultimately to take action rather than just buying one single SKU. When you have an absorption of 3 to 5 products, that customer is more likely to see results, right? And customers are more than likely to buy back from your business because of the front-end investment into the ecosystem. So we're simply attracting higher value customers with higher AOV bundles, and this is the pathway for D2C founders to take since 2020. If a brand wants to hit 10 million a year, or they want to scale up to 50 million a year, they have a front-end high AOV bundle, they have first order profit, and they have downsells, cross-sells, upsells to the existing customer base while attracting brand new customers into your ecosystem every single part of the year. How do I know this? Well, I've consulted founders at these levels to exponentially expand growth with my exact protocol. So I shared a 30-page protocol way before that covers more in depth how to set up your bundles, how to set up your funnels, how to test, how to set up your ad campaigns, and how to lift overall performance with all of these channels, with Meta being more top of funnel focus, with Google for retargeting, with either YouTube ads or TikTok ads to acquire brand new customers as well at a profit. But the process is simple. If I were to say this to a kindergartner or a kid in elementary school, I would say, look, push a front-end evergreen higher AOV bundle. You're making iterations to the existing sales funnel until profit is consistent. You're scaling across one single channel before diversing into other channels. You're building marketing assets in-house. And you only need a team of 6 to build in-house. You need a growth consultant, a full stack media buyer, creative strategist, creative coordinator, editor, customer success manager who's getting feedback from your existing customer base to launch different offers on the back end. Now, case studies to back up my claims. This right here, we took a brand during Q4 last year, 195K in total ad spend. Our net was 520K net profit. ROAS was 3.89 blended. Our nCPA was super profitable. As you can see here, the nCPA at $36.09. We were able to decrease previous CAC from $50. And then we leveraged the same process, making iterations to the funnel, which is creatives, landing pages, different offers. We pushed a higher AOV bundle on the front end. Our profit margin increased by 50%, and we had landing pages to overall raise the conversion rate on the back end. Now, as a byproduct of that, our net margin was at 69% prior to December last year. So now here we are again, a different brand. Last year, Q4 Cyber Monday, what we did was we spent 30K in total ad spend. We had 120K net profit across Google and Meta, and ROAS was around 7.92. Performance creatives were native to the platforms, and then our top of funnel bundle increased net margin by 60%, and we had optimal landing pages increased by 10% as far as conversion rate. Here's another one of our recent case studies for Q4 last year. And here we have 225K total ad spend, 373K net profit across Google and Meta, ROAS between 2.71, top of funnel bundle evergreen, and then we had the same funnel ran since Q1, Q2, and Q3. Right now, we were just simply increased the spend because everything was proven, and our nCPA was $51 within the previous months of being around $80 where the brand was barely breaking even. Now, as far as this process and protocol, here are the testimonials I have from our existing clients talking about our success, talking about how our protocol actually works. You can check that out here. Now you have two options, right? With the roadmap I laid out and the 4-step process I covered, option 1 is you apply the documented principles outlining what I just covered as far as offers, creatives, landing pages, pushing different AOV bundles. You do this and you're seeing a profit, right? You follow this exact process, you have a profitable Q4, and you have new customers to fuel your success next year, right? But option number 2 is you work with a team who has in-depth capital efficiency, who understands which variables to move. You build profitable, scalable systems to enable your growth and maintain new revenue acquired in spite of poor market conditions, and ultimately you have guidance to build in-house. You can schedule a call with me, and I can walk you through everything A to Z that I built out. But with that being said, this is the exact roadmap necessary. If you have any questions, drop them down below, and I'll see you guys in the next one.